Good evening, option traders. This is Sam the Trader Geek with your Tuesday night, July 23rd, 2024 options review video. Hope you had a great trading day. And of course, we're starting off with the SPX daily chart. As you can see that after the bounce yesterday, got a bit of consolidation, a bit of a topping tail, closing kind of 30 points from the high that we saw early in the day. Actually had about a 35-point range and closing 30 points off, but kind of to be expected after a big move yesterday. And you can see here the moving average conversion divergence, or MACD, is definitely pointing downward, and we're in the red, and our relative strength is at about 55. So kind of typical what happens after a 3-day sell-off. You get a bounce, little consolidation, and based on the reactions to Google and Tesla tonight, we might have a little bit more sideways action, at least on the NASDAQ side of things. We'll see how that influences the SPX. The implied expected move, the high is 55.90. We came close this morning, and the low end of the expected move is down here at 51.20 or so, or I should say 54.20. And so we're nowhere near that. We're closer to the top, and still lots of earnings to go this week, and also a lot of economic reports that are pretty important, including PCE on Friday. Taking a look at the day, most everything except for small cap stuff was in the red. We opened up in the red on the Qs, or the NASDAQ, closed down 0.35%. We're down a little bit after hours on Tesla and Google's earnings, not much. SPY closed down a little bit, and so did DIA. But small cap growth in concert with small cap strength was up about a whole percent after opening down on the day, and ARKK was actually up about 0.25%. And you can see from today's change, as we look at 25 various industries, a lot of red here and some dark reds in the transports. Cryptocurrency stocks got hit today. Chinese stocks today. Semiconductors are down about 1%, but on the strength of Lockheed Martin earnings, defense and aerospace was up about 2.7%. The rest was a kind of a mixed bag. No up 1% sectors other than defense and not sectors, industries, other than defense and industries. And biotech came a little bit close, but you can see quite a few that were down 1% or more. You're also starting to see deterioration. Qs now below the 21 EMA and 8 EMA, SPY below the 8 EMA, and we're got a little bit more red creeping in here with the slopes of these moving averages moving down, and you can see more red creeping in terms of market breadth, especially on the 5-day, and starting to impact the 20-day. So we are in a bounce from a 3-day sell-off. How long that will last, not sure. But if we go to take a look at SPX and see what we have in store, we have about another 56 points through Friday, plus or minus. Again, as I put in the morning note, I believe that's conservative. And today alone, we traveled in a 50-point range. So that's not saying much. Taking a look at the VIX, and I've got the VIX chart ready here. We got the daily here and the weekly over here. If you look at the weekly, we had brand new move up. And if the sort of stock were just kind of flagging, so to speak, less than a week here, kind of silly to say that, but it's what's happening. If you looked at this, you'd say this is bullish. This is like consolidating the gains from last week. And so we had two down days. So the second down day confirms the VIX, short-term VIX buy signal. Although when you have a spike in the VIX and it went as high as 1719, it's more confirmed in terms of a buy signal if we close at least 3 points below the peak. So we need to close below 1419, hence you see this alert here to say that, all right, we've got a solid buy signal, but VIX closed down today. That's a good thing. It confirmed the buy signal. Like to see it come in a little bit more if we're going to stay bullish on this short-term rally, but we could see more chop for a day or two. Speaking of the VIX, we closed down obviously 19 cents to 14.72. Let's call it 15. If we go out and look at the 16 calls, are trading at about 93 cents, and we go out $1 out in puts, and those are trading for about 70 cents. So a little bit biased towards the cost of the calls versus the puts, but not a lot. And so it's not telling us a whole lot so far. With that, let's take a look at our option trade list and not make this too long tonight. Oh, I did want to show one more thing here. You can see here with the various markets, other than small caps, a lot of red today, but very mildly so. And the one that was down 1% was the VIX, so that's a positive for the polls, but not as clear cut. It was the sectors. So we had 9 out of 11 sectors down. Healthcare could be, it's just kind of barely, but financials and materials were up, and energy for the second day in a row. Yesterday, energy was the only sector that was down, and today it was down 1.59%. So that's not helping our XLE trade, which we'll take a look at in a moment. See if I can get this showing, and there we go. So we started out with a new trade in CrowdStrike. As anybody who's been trading knows, this thing has been pummeled because of the outage they caused last Friday. We're clearly under the 200-day for the second day. So I thought it would be interesting to sell a put going out 2 standard deviations. 2 standard deviations means that we just went out 2 times the expected move into that expiration, which was at the time around $36. And 2 times 36 bucks is about $72. And that takes us from the price, at least at the time, it was about 272 or 273 to about $200. So we would have to move twice the expected move, or 2 standard deviations, to even hit the short strike of 200. Down a little bit since CrowdStrike was up about 10, 11, 12 bucks today, and kind of had a doji close and closed in the middle of its range. Fastly popping a little bit, but not enough to give us much of an oomph. We're still waiting on our first price target. We have until September on this, so just glad it's not turning down very quickly after we put it on. FXI is a closed trade as of today. Seemed to come back a little bit, but enough was enough. We put this on the basis of solid move up but all we have gotten is just choppy action and a move down. And so it's time to cut this one loose and take about a 48% loss on this particular trade. GM is a new trade. They reported earnings today, very strong, but they do have some issues in China and probably not going to be, if we're going to go into a recession, and automakers are very cyclical. They're as cyclical as they come. So, but we put on a play that is a calendar spread that goes out to December 2026. So we have lots of time to work this one, and we'll probably see it on our sheet for a long time to come, unless GM collapses totally, and it looks like we're way out of range for those calls. So we sold. We basically took a 60 strike calendar call spread, and we have the opportunity to play with the legs of this if we get a move one way or another, if we need to, if things aren't working out on an initial basis. Hood down a little bit. Thinking about just taking the money and run. Earnings are on August 2nd. I guess that would be next week sometime. We've got 83% profit. I don't want to risk it, but I'm keeping a close eye here. MACD is turning back down after coming up again. And obviously this is a little bit dependent on how crypto is doing, but with earnings coming up, we might just close this one down and take the money and run, so to speak. IWM, we closed down the weekly play, and quite honestly, I was a little bit too trigger happy to close it. Wish I hadn't closed it so fast. But we recorded a nice 37% profit on this one. At one point, we were underwater yesterday, came right back. I should have given it more of a chance, but a profit is a profit. And that caused me to go ahead and put on the new play that I was anticipating to do on a pullback. Hopefully, if you put this on, you put it on small. We're only up about 2% on it. And this is looking really good, especially if we have continuation tomorrow and we can take out this high here. That would be a reason to add to the play. And MACD is strong, and RSI is still a little hot, but you know, small caps are looking good. Lyft showing a little bit of green. We're still down on this one about 60%. We have until September. Not terribly worried about it, but we will have earnings coming up on this one, but I don't think it's anytime soon. Let's see. Actually, it's August 7th, so I'll decide whether we need to roll these out in time and get a lower strike so we're not stuck and too close into the money. NVIDIA, with the semiconductor weakness today, giving back 95 cents, not much. We took our first price target yesterday at around 520, and now our next target is $6. So we're still up about 25% on it. Hopefully this doesn't get hit tomorrow because of the other tech earnings. Now PFE, it's got to stop messing around. We're at 29.50. We hit that 30 level, and it's kind of a ceiling. I don't want this to start falling below 28 or 29 even. I'm going to start to get concerned that that was all she wrote. But at this point, we paid 3 cents for the 33 cents for the structure. It's worth 3 cents at the moment. Since we sold a put, this can get worse than zero, so to speak. So watching this one closely. Still low volume, so to speak. Not terribly concerned just yet. Rivian, turning the corner today, although I think Tesla's earnings going to weigh on this one tomorrow. And looking at it right now, a little bit. We closed at 1750, and Rivian's closing at is trading for about 1702. So Tesla's earnings having a little bit of effect on this, but we have until September on this one, and we've taken one price target. We're still up about 35% of it, not too bad. SDS, our hedge, with the SPY down a little bit, it was up about 9 pennies. We're very close to break even on these, coming back really fast, and that's what happens on a 2x inverse index fund. SoFi, after rallying up and above the 200-day, is kind of stuck under there. And this is a play into January, and we're still profitable on this, but lots of time for this one to play out, and we'll see what happens. SPY is our other hedge. The last profit target we caught was $1, and right now it's trading at 88 cents. So if we get further weakness, this is going to be helpful to hedge the rest of our portfolio. We can see the MACD is solidly down, and as we said earlier, it's in the bounce phase. Here's a problem child that has me a little bit concerned. Square. We paid $331 for the structure. It's at $280, only down 15%, but we haven't taken our first profit target on this yet. And so we had a nice solid bounce, and now we're getting a little bit of weakness, and we have earnings coming up soon, I think, yeah, on the 1st of August. So not going to hang around too much longer here. Given that it's not performing. So this one might be on a chopping block for tomorrow before we give up too much. It's just not doing what I was expecting it to do. Target holding up pretty well. This little pink line, or fuchsia line, whatever you want to call it, is VWAP. It's holding VWAP, a modified VWAP, so to speak. And we are down 61% on the calls. Earnings are not for a while. It's one of the later reporters when a lot of the retailers report. But this one is not looking too good. But if we close back down, this blue line is a 50-day. If we close down below that, I'll have to reassess this. It was looking very promising, but with the overall market weakness, it's not able to buck it. Walmart, holding up well. I do note that the MACD is kind of turned down again, but it has been obviously a choppy ride, and we're 2 days apart from our last 52-week high, and all-time high for that matter. We're up 71% on the puts, and where we go? Yeah, we're up 66% on the puts. And since this is all the way out in September, I may have to close this early before we get to our 5-cent target. Especially if this starts showing weakness, we can give this back very quickly, and that's not something I want to do. Wolf, another cryptocurrency stock, not doing much today. It looks like topping tail, doji, whatever you want to call it. Our next target is 210. We're at $1.20, but these have until January. Nothing really terribly concerning. But here is another problem child du jour is XLE. The energy is weakening along with crude prices, and that has us down 16% on our play. And although we took our first profit target here, our next profit target is $4, but we're going to need a bounce very quickly here. I see we have a parabolic stop and reverse volatility stop here. And if we close below that, I'll have to reassess and say, this is going to have further weakness and it's time to bail on this particular play. Well, that's all I have for you tonight. I hope you have a good evening and a good trading day tomorrow, and catch you back on the next video on Thursday. Take care, and I'll see you in the room. Bye-bye.